It started in a cramped dorm room at MIT. Four computer science students, Eli, Marcus, Priya, and Daniel, weren't interested in parties or frat houses. Their obsession? Algorithms, financial markets, and the power of AI. One rainy night, while watching a YouTube video about futures trading, Eli had an idea. What if we built an AI that trades crypto futures, faster, smarter, emotionless? At first, the others laughed. Futures were dangerous. Leverage could wipe you out in minutes. But Eli's pitch was magnetic. They wouldn't trade themselves. They'd let an AI do it. Within weeks, the group coded non-stop. Using open-source models, reinforcement learning, and market data from Bybit, they trained what they called Hydra, an AI bot designed to detect micro-trends and execute trades at lightning speed. Testing Hydra on historical data gave them goosebumps. It was pulling hypothetical 300% plus gains in 48 hours. Of course, backtesting wasn't reality, but it was enough to take the next step. They pooled $8,000 of their own money and connected Hydra to a real Bybit futures account. Hydra was online, and it was hungry. The first week was slow. Hydra made cautious trades, 5x leverage, conservative stops. It lost $300 the first day, but on day 4, everything changed. Hydra detected a spike forming in a mid-cap altcoin, an unusual volume surge. It entered long. 10 minutes later, the coin skyrocketed 27%. Hydra closed the trade seconds before the reversal. Profit, $2,860. The dorm room erupted in screams. Marcus ran outside in the snow barefoot. They'd cracked something. By the end of week 1, their $8,000 was $14,200. But more than the money, they felt power. A machine they built was beating the market. Hydra wasn't emotional. It didn't panic. It executed like a sniper. They started recording every trade, every tick, posting anonymized screenshots to Reddit, Discord, and even Twitter. People were skeptical. Some accused them of photoshopping gains, but others watched closely. One tweet went viral. A bunch of students just built an AI that's front-running the market. This could be the future of trading. It was only the beginning. As Hydra's success spread across crypto forums, the team faced new challenges. The AI was growing bolder, taking bigger positions with up to 20x leverage on Bybit futures. The thrill was addictive. Every win felt like lightning striking twice. Priya, the team's risk manager, insisted on caution. The market is unpredictable. One wrong move and we're wiped out. But the others were convinced Hydra was invincible. Hydra's algorithm started incorporating news sentiment analysis and social media trends, including meme coins tracked via Axiom Trade's unique data feed. This gave it an edge in spotting hype cycles before anyone else. The stakes rose. Their initial $8,000 investment had ballooned to $250,000 in just 2 months. But with great power came great attention. Investors and influencers reached out, offering millions to license Hydra's technology. The team debated, should they stay underground or launch a startup? Marcus warned, if we scale too fast, we lose control. The crypto market is a beast. Yet, they couldn't ignore the opportunity. Hydra was not just a trading bot anymore. It was a symbol of AI's disruptive power in finance. Then it happened. A sudden market crash, triggered by unexpected regulation news and a massive sell-off in major coins, sent futures markets into chaos. Hydra, programmed to adapt, started making rapid-fire trades to hedge losses. But the volatility was beyond anything the AI had seen. Leverage magnified the destruction. Within hours, $1.5 million evaporated. Panic swept the team. The dorm room's once electrifying energy turned cold and tense. Daniel slammed his laptop shut. We thought we built a god, but the market doesn't forgive mistakes. Priya's warnings echoed loudly. We underestimated the risks. AI can't predict everything. Yet, amidst the wreckage, there was a lesson. Hydra's code was resilient. They debugged, retrained, and adapted the bot to survive harsher conditions. It was a humbling reminder. The future was uncertain, but innovation never stops. After the devastating crash, the team faced a crossroads. Their dream had turned into a nightmare overnight, and external investors were growing wary. But Eli refused to quit. "We built something powerful," he said. "Hydra just needs to learn from failure." They spent weeks analyzing every failed trade, debugging errors, and fine-tuning Hydra's AI to better handle market volatility. They added new data sources, including on-chain metrics and real-time sentiment from platforms like Axiom Trade, to give Hydra a more holistic view. Slowly but surely, Hydra began clawing back losses. The bot started to outperform again, this time with improved risk controls and smarter decision-making. Their account balance rose from a near wipeout back to $600,000 in 6 months. The students grew more confident, but also more cautious. The lesson was clear. Success was fragile, and the crypto market was a relentless teacher. Word about Hydra's comeback spread like wildfire. Soon, a venture capital firm reached out with a multi-million-dollar investment offer, hoping to turn the bot into a commercial product. With fresh capital, the team expanded, hiring data scientists, engineers, and compliance experts. They integrated Hydra with Bybit's institutional API and deepened partnerships with platforms like Axiom Trade for exclusive market insights. Hydra started trading across multiple crypto futures markets simultaneously, leveraging AI to spot trends faster than any human trader. Within a year, the bot had generated $5 million in profits. The team's vision of AI-driven trading was no longer a dorm room experiment. It was shaping the future of finance. Yet, with rapid growth came new pressures: regulation, security threats, and ethical questions about AI's role in markets. The students realized that their journey was just beginning. Success brought scrutiny. Regulators started investigating AI trading bots, including Hydra. Rumors swirled about potential bans on leveraged futures, trading for retail users on Bybit and similar platforms. The team faced mounting pressure to comply with new rules while maintaining Hydra's edge. Cybersecurity threats grew too. Hackers attempted to breach their systems, trying to steal the bot's secret algorithms and access Bybit accounts. The team doubled down on defenses, working around the clock. Meanwhile, internal tensions flared. Some members pushed for a quick exit and sale, while others wanted to keep innovating. The weight of millions in profits and responsibility strained friendships. Priya, once the voice of caution, warned, "We can't control the market, but we can control what we build. We have to stay ethical, transparent, and prepared." The AI revolution in crypto was no longer just a tech story. It was a battle for the future of finance itself. Despite the challenges, Hydra thrived. The team launched a public version, allowing everyday traders to harness AI-powered futures trading via Bybit and data-driven insights from Axiom Trade. Hydra's success inspired a new wave of AI-driven financial tools, proving that human ingenuity combined with machine intelligence could reshape markets. For the students, the journey transformed their lives, from college dorms to crypto pioneers shaping an emerging industry. But the story also serves as a warning. In the high-stakes world of crypto and AI, fortunes can be made and lost in moments. As AI tools like Hydra become mainstream, one thing is clear: the future of trading will never be the same.